Alphabet just reported over $90 billion in revenue in a single quarter, and net income up 46% year over year. But here's the real question. Is Google's AI empire just getting started, or are we already too late? Because while the headlines scream about record profits, the real story is unfolding behind the scenes. AI infrastructure, cloud growth, YouTube's slowdown, and Google's $17 billion bet on the future. In this video, we're breaking down exactly how Alphabet is making its money, where it's headed, and whether the stock still makes sense in 2025, based on both fundamentals and long-term strategy. Founded in 1998, Alphabet is a tech giant primarily known for its Google services. It earns revenue mainly through digital advertising on platforms like Google Search and YouTube. The firm also sells apps and digital content via Google Play. Google Cloud represents another key driver and provides businesses with computing power, data storage, and digital software tools through its network of data centers and server farms. The company is currently available with a starting dividend yield of 0.47%, compared to its 5-year average of 0.48%. The price-to-earnings ratio is currently 19.4, while the 5-year average stands at 21.9 and the sector average is 18.1. The expected price range is estimated to be between $183 and $224, while the stock is currently trading around $180, suggesting it appears to be undervalued based on these figures. The company currently pays an annual dividend of $0.84, distributed on a quarterly basis. The next dividend payment is scheduled for September 16th, and shareholders who own the stock by September 9th will be eligible to receive it. The earnings payout ratio has averaged around 10%, and it's true that most investors don't hold this company primarily for its dividend. The free cash flow payout ratio is also very low, so a dividend cut is highly unlikely. Earnings per share has been following a steady upward trend. Although there was a dip in 2022, it has since returned to a growth trajectory. The same can be said about free cash flow. Over the past 3 years, earnings per share has shown very strong growth, and the same applies to the sales growth chart. However, expectations for the next 12 months indicate only around 3% growth. The shares outstanding chart has been on a steady downward trend for years, while total sales continues to show consistent growth despite the shrinking share count, something investors generally love to see. Both return on equity and return on invested capital are well above minimum expectations and remain stable. The same can be said about operating margin and free cash flow margin, although with Google, this hardly comes as a surprise. The company's debt management is excellent. Both the net debt to EBITDA and net debt to capital charts have effectively been at zero for the past decade. It's no surprise, then, that interest coverage significantly exceeds expectations as well. The company is currently available with a starting dividend yield of 0.46%, which was recently increased by 5%. Its credit rating is AA+, which is considered very strong. The dividend also appears to be secure. The company appears to be very slightly undervalued. Disclaimer: this video is for informational and educational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions, and never base a financial decision solely on the content of this video. Let's start with the numbers. In Q1 2025, Alphabet generated $90.2 billion in revenue, up 12% from the same quarter last year. That's an increase of nearly $10 billion in just 12 months. Operating income came in at $30.6 billion, representing a 20% year-over-year increase. And net income soared to $34.5 billion, up a staggering 46%. Diluted earnings per share rose from $1.89 to $2.81. That's a 49% jump. Visually, you can see this growth on the revenue and operating income chart. Revenue jumped from $80.5 billion to $90.2 billion. Operating income climbed from $25.4 billion to $30.6 billion. And the operating margin improved from 31.6% to 33.9%, showing not just growth, but more efficient profitability. Now let's look at costs. Cost of revenues increased by 8% to $36.4 billion. R&D expenses rose by 14% to $13.6 billion, showing continued investment in innovation. Sales and marketing actually declined by 4%, down to $6.2 billion. General and administrative costs increased 17% to $3.5 billion. Despite higher spending in some areas, Alphabet kept overall cost growth in check compared to revenue growth. When we break it down by segment, Google Services, which includes search, YouTube, and network ads, generated $77.3 billion in revenue, up from $70.4 billion a year ago. Google Search and Other, $50.7 billion, up 10%. YouTube ads, $7.3 billion, down 2%, possibly reflecting ad market softness. Google Network, $8.9 billion, up 10%. Subscriptions, platforms and devices, $10.4 billion, up 19%. The segment's operating margin improved from 39.6% to 42.3%, showing strong profitability. Meanwhile, Google Cloud continues to impress. Revenue rose from $9.6 billion to $12.3 billion, a 28% year-over-year growth rate. Operating income more than doubled, jumping from $900 million to $2.18 billion. This pushed Cloud's operating margin up from 9.4% to 17.8%, signaling scalability and improving profitability. Alphabet is also investing heavily in its future. Capital expenditures hit $17.2 billion, up from $12 billion a year ago, a 43% increase. These investments are primarily going toward AI infrastructure and data centers, showing Alphabet's aggressive push into artificial intelligence. And despite these major investments, Alphabet still generated $18.95 billion in free cash flow for the quarter. Trailing 12-month free cash flow is now sitting at $74.9 billion, one of the strongest in the entire tech sector. Just to put it in perspective, operating cash flow for the quarter came in at $36.1 billion, even after subtracting $17.2 billion in capex, leaving the company with an enormous cash cushion. Alphabet is funding AI expansion, cloud growth, and long-term innovation entirely from internal cash flows, with no need for heavy debt or dilution. So to sum up the quarter, record high revenues, accelerating cloud profitability, massive AI infrastructure investments, and industry-leading free cash flow. Alphabet continues to operate from a position of financial strength, and Q1 2025 shows that they're scaling profitably across all major business units. Thanks for watching, and if you found value in today's video, give it a thumbs up and consider subscribing for more smart, long-term investing ideas. Stay patient, stay consistent, and keep building your path to financial freedom. Until next time, take care and happy investing.